For many, Bitcoin is something that people have heard about, but they don't quite understand. For others, it's helped make them millionaire.
Could we be seeing the end of the cryptocurrency boom? Cryptocurrency has lost more than 8.5 trillion rand in the past week alone.
What is Bitcoin and how does it work? Bitcoin explained simply. Not only is Bitcoin the first cryptocurrency, but it's also the best known of more than 5,000 cryptocurrencies in existence today. Financial media eagerly covers each new dramatic high and stomach-churning decline, making Bitcoin an inescapable part of the landscape. While the wild volatility may produce great headlines, it hardly makes Bitcoin the best choice for novice investors or people looking for a stable store of value. Understanding the ins and outs can be tricky, so let's take a closer look at how Bitcoin works. But before we begin, what's your general take on Bitcoin and cryptocurrency? Let us know in the comment section below. Bitcoin on TV, Bitcoin on radio, Bitcoin on newspapers, Bitcoin everywhere. So what is it? Bitcoin is a decentralized digital currency that you can buy, sell, and exchange directly, without an intermediary like a bank. Bitcoin's creator, Satoshi Nakamoto, originally described the need for an electronic payment system based on cryptographic proof instead of trust. Each and every Bitcoin transaction that's ever been made exists on a public ledger accessible to everyone, making transactions hard to reverse and difficult to fake. That's by design. Core to their decentralized nature, Bitcoins aren't backed by the government or any issuing institution. And there's nothing to guarantee their value besides the proof baked in the heart of the system. Since its public launch in 2009, Bitcoin has risen dramatically in value, although it once sold for under $150 per coin. As of October 26, 2021, one Bitcoin was selling for more than $62,000. Because its supply is limited to 21 million coins, many expect its price to only keep rising as time goes on, especially as more large institutional investors begin treating it as a sort of digital gold to hedge against market volatility and inflation. How it works? Well, another magic. Bitcoin is built on a distributed digital record called a blockchain. As the name implies, blockchain is a linked body of data made up of units called blocks that contain information about each and every transaction, including date and time, total value, buyer and seller, and a unique identifying code for each exchange. Entries are strung together in chronological order, creating a digital chain of blocks. Blockchain is decentralized, which means it's not controlled by any one organization. It's like a Google Doc that anyone can work on. Nobody owns it, but anyone who has a link can contribute to it. And as different people update it, your copy also gets updated. While the idea that anyone can edit the blockchain might sound risky, it's actually what makes Bitcoin trustworthy and secure. For a transaction block to be added to the Bitcoin blockchain, it must be verified by the majority of all Bitcoin holders. The unique codes used to recognize users' wallets and transactions must conform to the correct encryption pattern. These codes are long random numbers, making them incredibly difficult to produce fraudulently. In fact, a fraudster guessing the key code to your Bitcoin wallet has roughly the same odds as someone winning a Powerball lottery 9 times in a row. This level of statistical randomness in blockchain verification codes, which are needed for every transaction, greatly reduces the risk of anyone making fraudulent Bitcoin transactions. Bitcoin mining is the process of adding new transactions to the Bitcoin blockchain. It's a tough job. People who choose to mine Bitcoin use a process called proof of work, deploying computers in a race to solve mathematical puzzles that verify transactions. To entice miners to keep racing to solve the puzzles and support the overall system, the Bitcoin code rewards miners with new Bitcoins. It was possible for the average person to mine Bitcoin in the early days, but that's no longer the case. The Bitcoin code is written to make solving its puzzles more and more challenging over time, requiring more and more computing resources. Today, Bitcoin mining requires powerful computers and access to massive amounts of cheap electricity to be successful. Bitcoin mining also pays less than it used to, making it even harder to recoup the rising computational and electrical costs. In 2009, when this technology first came out, every time you got a stamp, you got a much larger amount of Bitcoin than you do today. There are more and more transactions now, so the amount you get paid for each stamp is less and less. By 2140, it's estimated all Bitcoins will have entered circulation, meaning mining will release no new coins. and miners may instead have to rely on transaction fees. In the US, people generally use Bitcoin as an alternative investment, helping diversify a portfolio apart from stocks and bonds. You can also use Bitcoins to make purchases, but the number of vendors that accept the cryptocurrency is still limited. Big companies that accept Bitcoin include Microsoft, PayPal, and Whole Foods, to name only a few. You may also find that some small local retailers or certain websites take Bitcoin, but you'll have to do some digging. You can also use a service that allows you to connect a debit card to your crypto account, meaning you can use Bitcoin the same way you'd use a credit card. This also generally involves a financial provider instantly converting your Bitcoin into dollars. In other countries, particularly those with less stable currencies, people sometimes use cryptocurrency instead of their own currency. That said, when you use Bitcoin as a currency, not an investment in the US, you have to be aware of certain tax implications. Most people buy Bitcoin via cryptocurrency exchanges. Exchanges allow you to buy, sell, and hold cryptocurrency. Setting up an account is similar to opening a brokerage account. You'll need to verify your identity and provide some kind of funding sources, such as a bank account or debit card. Major exchanges include Coinbase, Kraken, and Gemini. You can also buy Bitcoin at an online broker like Robinhood. Regardless of where you buy your Bitcoin, you'll need a Bitcoin wallet in which to store it. This might be what's called a hot wallet or a cold wallet. A hot wallet, also called an online wallet, is stored by an exchange or a provider in the cloud. Providers of online wallets include Exodus, Electrum, and Mycelium. A cold wallet or mobile wallet is an offline device used to store Bitcoin and is not connected to the internet. Some mobile wallet options include Trezor and Ledger. A few important notes about buying Bitcoin. While Bitcoin is expensive, you can purchase fractional Bitcoin from some vendors. You'll also need to look out for fees, which are generally small percentages of your crypto transaction amount, but can really add up on small dollar purchases. Also, be aware that Bitcoin purchases are not instantaneous like many other equity purchases seemingly are. Because Bitcoin transactions must be verified by miners, it may take you at least 10 to 20 minutes to see your Bitcoin purchase in your account. Like a stock, you can buy and hold Bitcoin as an investment. You can even now do so in special retirement accounts called Bitcoin IRAs. No matter where you choose to store your Bitcoin, people's philosophies on how to invest it vary. Some buy and hold long-term, some buy and aim to sell after a price rally, and others bet on its price decreasing. Bitcoin's price over time has experienced big price swings, going as low as $5,165 and as high as $28,990. Consumers can also invest in a Bitcoin mutual fund by buying shares of the Grayscale Bitcoin Trust, GBTC. However, it's currently only open to accredited investors who make at least $200,000 or have net worths of at least $1 million. This means the majority of Americans aren't able to buy into it. In Canada, however, diversified Bitcoin investing is becoming more accessible. In February 2021, a purpose Bitcoin ETF, BTCC, started trading as the world's first Bitcoin ETF, and the Ontario Securities Commission also approved the Evolved Bitcoin ETF, EBIT. American investors looking for Bitcoin or Bitcoin-like exposure may consider blockchain ETFs that invest in the technology underlying cryptocurrencies. An important note though, while crypto-based funds may add diversification to crypto holdings and decrease risk slightly, they do still carry substantially more risk and charge much higher fees than broad-based index funds with histories of steady returns. Investors looking to grow wealth steadily may opt for index-based mutual and exchange-traded funds, ETFs. Bitcoin can be exchanged for cash just like any asset. There are numerous cryptocurrency exchanges online where people can do this, but transactions can also be carried out in person or over any communications platform, allowing even small businesses to accept Bitcoin. There's no official mechanism built into Bitcoin to convert to another currency. Nothing inherently valuable underpins the Bitcoin network. But this is true for many of the world's most stable national currencies since leaving the gold standard, such as the US dollar and UK pound. There have been several high-profile cases of Bitcoin exchanges being hacked and funds being stolen, but these services invariably stored the digital currency on behalf of customers. What was hacked in these cases was the website and not the Bitcoin network. In theory, if a hacker could control more than half of all the Bitcoin nodes in existence, Then they could create a consensus that they owned all Bitcoin and embed that into the blockchain. But as the number of nodes grows, this becomes less practical. The real problem is that Bitcoin operates without any central authority. Because of this, anyone making an error with a transaction on their wallet has no recourse. If you accidentally send Bitcoins to the wrong person or lose your password, there's nobody to turn to. Of course, the eventual arrival of practical quantum computing could break it all. Much cryptography relies on mathematical calculations that are extremely hard for current computers to do. But quantum computers work very differently and may be able to execute them in a fraction of a second. There have been several criticisms of Bitcoin, including that the mining system is enormously energy hungry. The University of Cambridge has an online calculator that tracks energy consumption, and at the beginning of 2021, it was estimated to use over 100 terawatt hours annually. For perspective, in 2016, the United Kingdom used 304 terawatt hours in total. Bitcoin, as the oldest and most prominent cryptocurrency, is more than just the leading form of crypto. Since Bitcoin first launched in January of 2009, the result of a white paper authored by an anonymous researcher, Bitcoin has helped establish the technology, the market, and the demand that has paved the way for thousands of types of crypto, altcoins, tokens, and more. Now the idea of a decentralized form of currency that is built on a blockchain and governed by a peer-to-peer network is no longer novel. And because Bitcoin was one of the first successful uses of blockchain technology, the blockchain applications have likewise expanded throughout the cryptoverse, powering innovations like smart contracts and NFTs. These days, there are myriad ways to buy and sell Bitcoin, but investors need to know how different exchanges work, how to store and secure Bitcoin, and what some of the fees may be. All that said, it has never been easier to trade Bitcoin and dozens of other types of crypto. The next 10 years could be crucial for Bitcoin's development. Aside from financial revolutions, there are a few aspects of Bitcoin's environment to which investors should pay particular attention. At the moment, cryptocurrency is torn between becoming a store of value and a transactional medium. That's all on our video about Bitcoin and how it works. If you enjoyed it, be sure to subscribe to our channel for more of our amazing content. Please give us a like, share the video, and don't forget to turn on the notification bell for timely updates of our latest uploads. We value your feedback. Feel free to share your thoughts with us in the comment section below.